Welcome to the Candy Valentino Show, the podcast for founders, investors, and entrepreneurs, where we have honest conversations about what it takes to grow your business, build more wealth, and create financial freedom.
Hey guys, welcome back to another episode of the show. Thanks for tuning in with me today for this episode. And as you know, we have been making some changes to the show, changing our drop schedule a little bit. And as we work through the month of May, you're going to see some continued changes. So thanks so much. We're really excited about it. And today's show is no exception. We want to talk about something that is on pretty much everyone's mind: the economy, the tariffs, the uncertainty that's going on, a little bit of the anxiety that a lot of people are facing as they're seeing their IRAs and their 401ks shrink. Not sure what it's going to happen with Amazon now telling us exactly how much a tariff is included in each of our purchases. So what is happening? And if you are somebody that's struggling right now with a little bit of just uncertainty or even anxiety about the market, well, we're going to talk about exactly what's going on and, most importantly, how you can overcome it. So we found this article in Forbes that is talking about Americans overall are just a little worried about the economy, and that it's about the worst it's been in years. Does this signal a recession? So first, let's chat about what we do know. So it came out just recently that the U.S. consumer confidence fell for the fourth consecutive month, hitting a 12-year low due to rising concerns about the tariffs and inflation. And if you're thinking about the first 100 days of this current administration, well, it's interesting to think that a lot of people feel that we should see rapid change already. You know, one of the things that I kind of think people view the 100 days incorrectly is I think that it's really tough to make drastic change in 3 months, especially when you are turning over in a completely new company, if you will. And if you're not watching me and you're listening, I'm using air quotes with my fingers because I often think about our government as I would a company. If I was taking over a company tomorrow and we were replacing its entire leadership team, if we were replacing the CEO that's at the forefront, if we were replacing every policy and position that we had for the prior 4 years, how difficult would that be? And if we inherited some problems or not, again, depends on what side you fall to believe that maybe there are a lot of issues that were going on in the country that maybe came to a surface in early 2025. But if you believe that there are even some, right? Obviously, I think common sense, we would say that there were some issues with rising costs and there were some issues with immigration and the border. So regardless where you fall, I think most people, just common sense approach, would say that there were some issues. I can't imagine walking into a company and only having 3 months to make radical changes while everybody is watching. Everybody in the country is watching. Everybody in other countries are watching me. Like, everybody is scrutinizing every single move that I make, from financial decisions to military decisions to infrastructure to, you name it. I can't imagine the pressure. And even if everyone wasn't watching, and I was able to do this behind closed doors and change out the leadership team and make all new policies and procedures and systems and create change, I don't know how successful I would be in just 3 months. And so I often think of that anytime there's an administration change, one way or the other, regardless of what side you're on. I can't imagine having tons of success right out of the gate unless it's all for show. Because obviously we can market a lot of things, right? If I were to take over a company, a failing company that wasn't paying their bills, that were losing jobs to other competitors, right? These are real things that the US has been dealing with literally since the 70s. If that was the company I was taking over, obviously it would take just time to assess how bad the situation is. It would take time to understand who's going to get us out of that situation. It's going to take time to think about what are the different ways we can test different marketing strategies, different financial strategies. How do we know how bad it really is or how good it really is? We really need to assess all of the information. So when we talk about what's been going on in the news right now is the first 100 days, I don't really put a lot of weight on it. I like to see what has been started, what decisions have been made, how has the current, if you will? Like, has there been a lot of momentum? And well, one thing we do know is there's been a lot of waves. There have been a lot of changes, a lot of waves. There's been a lot of uncertainty. We've got literal overhauls of how just our economic policies are positioned on the global market, changing tariffs, obviously trying to cut inflation as it continued to creep up. And so that's going to create a lot of uncertainty. Again, I look at it as a company. If you're coming in and you're making all of these changes, of course, if you have millions of people that are your workforce, they're going to have a little question about all the things that you're doing. So I think right now, not only do we need to stay the course, but I also think we need to have a little faith. I think it's a little blind faith, to be honest, if you don't really understand what's going on behind closed doors. And so I think consumers are anticipating a recession right now because they are feeling this uncertainty in the market. They're seeing these changes and they're seeing things shrink. And then they see a number come out that's like 0.3%, like 0.3%, the economy shrunk. Honestly, I was shocked. I thought the number was going to be far worse because of all of the changes happening. So I was actually pleasantly surprised. Now, the media certainly didn't make it seem like that. They made it seem like it was so awful and that the inflation didn't come down as much as it did, but it still came down. So there's a lot of things that are happening. I just believe that what we're doing is we're looking in this really condensed period of time, and we need more time for it to play out. And I think we are all going to see that rapid time over the next 3 to 6 months to really see how much this policy is going to change. But quite honestly, when we are moments like this of the first 100 days and everybody wants this full report, I'm thinking, I am so glad that I never ran for office, because having everybody watch, I mean, I almost did twice in my life, but I'm thinking like to have that stage where everybody is watching as you're trying to make just real-time decisions and change and adapt and pivot. Like, wow, I can't imagine the stress and the pressure. So because I look at that as if I was taking over a failing company, regardless who's in the White House, I like to give them some more time to see how is this going to play out. Now, we're seeing that plans to purchase homes, cars have all declined. Those are all stats that came out. Although intentions to buy things like large appliances have increased, possibly because people were worried about price hikes like we talked about on the show last week. So a lot of times people, when they're worried about increases, they buy now in order to save. It's also a great marketing strategy for all of you with a business. But making sure that we understand the only reason that is happening, nothing actually changed in the economy or the labor market. Like really nothing's kind of changed in the last 3 months. What happens is when there is instability and uncertainty, people freeze. Although what we're seeing is people are spending more. It's a very odd mix. Typically, we don't see the two. We typically see people not buying housing and cars and then not spending as much. But the two things together where they're spending more and they're not spending on the houses and they're not doing, cars and things is a very strange mix that we don't typically see. But after a strong 2024 during the holidays, we saw retailers shoot up. There was more purchasing in the end of 2024. There was more consumer debt in the end of 2024. Retail sales dropped a little bit in January, which is typical, and then really rebounded again in February, and we're starting to see spending continue. So consumer confidence is always a key economic indicator, since consumer spending is really what's driving the U.S. economic activity. So when you don't have consumer confidence, people are not going to spend as much. When you don't have consumer confidence, people aren't going to invest as much. When you see red consistently in your portfolio, people are not jumping to invest. So all of this is perfectly normal. What are some of the things that you can do? It's managing your psychology. I always say an investor mindset is really about managing your psychology, understanding that when things are uncertain and people freeze, that's your opportunity to double down. And it takes risk, it takes guts, it takes bravery, courage in order to do that. I know I'm doing it right now, like continuing to buy down where it's like, oh my gosh, where is the bottom? Is this the bottom? And then every time you see a little pop, you see money surge in. So what most people do is when their investments start to go down, they start to pull money out of the market. And then once they see it go back up, they push it back in, but then they just miss the gap of that increase. So it's always about when everyone is doing one thing, Where's the opportunity in the opposite? That's what I'm always trying to look at. And that's when I identify patterns. I always say if I'm good at anything, it's really just identifying patterns and understanding the patterns and then making sure that I make the tough decision based on that pattern, even if my own gut is like, oh my gosh, this is so painful, or this could be painful, or this is really risky. If there is an informational pattern that says when everybody is not investing and not spending and not doubling down on their marketing, is there an opportunity for you? The answer is typically yes. So I want you to think about these uncertain times as opportunity. I want you to think about when you hear the word recession, I want you to, or depression or reset or all of these terms that the media is going to throw out because it's great clickbait. Where is the opportunity for you in your family? If this housing market continues to be on a freeze, you know what that means for you? It means that if you are looking to buy a home, and like I always say, it doesn't matter what the rates are. If it's a good time for you to buy a home, if it's a good time for your family to buy a home, if you have enough saved in order to make your down payment, and then that's when you know it's a good time to buy. But when the real estate market starts to freeze like this, you always want to look at the opportunity because there's a lot of houses that will sit. And what's that mean? That means that there's opportunity for you to take a look at the listings to see what's been sitting on the market for 120 days or more. What's had a bunch of price reductions to see that maybe there's an opportunity for you to get a house for less, other than when you wait and there's bidding wars and low rates and you have more buyers to compete with. So in every one of these challenges, there is an opportunity, making sure that you're looking for it and most importantly, that you're taking action. And that's going to bring us into segment 2, how to deal with the anxiety during economic uncertainty, because we can talk about it and I can tell you what to do, but there's this thing in your mind sometimes that says, Candy, I don't know that I can control it. So what do we know? Number one, you got to focus on what you can control. We can't control every time Trump opens his mouth and something crazy happens with tariffs in the market. We can't control what's going on in trade policy. We can't really even control what's happening next. The only thing that we can focus on is what we can control. And when we shift that mindset, it is amazing how our anxiety can decrease. Because if we're constantly focused on what we can't control, imagine how frustrating that is. The economy is not predictable, and then it's not even tried and true. You can listen to great financial advice, and it'll typically get you in the right direction. But I can tell you, nobody saw what was going to happen these last couple months. We had no idea that the tariff talk was going to come first because Trump's last term, taxes came first, tariffs came second. So it kind of just quietly went on as the tariff war, but it was nowhere near as volatile as this. We had no idea that the tariff talk was going to come first and that this much uncertainty was going to happen in the market. But here's the thing to remember. Regardless of any tariff, stick to buying what you need. Some people will tell you to make big purchases now or stockpile so that in case the tariffs change, but sometimes you want to exercise restraint. We don't know that they're coming. We don't know if they're going to be temporary. We don't know if they're going to be long-term, and we don't know how the economy will adjust. So purchase what you need. And if you have disposable income to stock up, then by all means, go ahead and do so. But don't buy big, large purchases just because there's a sale or you think that something is going to be changing, because anytime you over leverage yourself, anytime you spend more than necessary, that also creates anxiety. So making sure that you reduce your spending in economic times, only buy what you need, that will calm your nerves as well. So focus on what you can control and don't buy anything that you don't need. The third one is make sure that you watch out for scams. Again, anytime that you can really understand the financial situation better, it's also going to decrease your anxiety. Don't ever listen to people who are going to pressure you to take quick action. Make sure that you are slowing your decision making. Don't ever send money to somebody that you don't fully know who they are or what they're doing. Don't do the latest crypto scam. If you can't, understand an investment, you don't want to invest in it. Make sure that you are watching out, because it's not just how much money you make, it's also how much you keep. It's how much you protect. It's how much that you preserve during difficult times. So make sure that you're cautious of that. And last but not least, be careful to not overload yourself with information. So often, the anxiety that people face in uncertain times are because they are binging the news. They are watching their social media feed. They are in group chats about the economy, which is inciting fear. And it's making you second guess the financial plans that you committed to. So it's always good to educate yourself about what's happening. Just make sure that it is not increasing your anxiety. Make sure that you're taking the information, understanding it a little better, and that should lessen your anxiety. Listening to this show should lessen your anxiety because it's information that you can use, it's digestible, that you can understand it, and it's going to help you stay on track for whatever financial plans and goals that you have. And last but not least, I think I already said last, but anyways, we'll call this a bonus then. So we're going to throw this on at the end because this is important too. I think this creates a lot of anxiety for people. If you are not planning on retiring soon, don't watch your investments closely. Market volatility is going to happen. And most things that happen right now, if you're not going to retire in 2, 5, or 7 years from now, are not going to change your retirement plan. They're really not even going to change much at all of your financial goals. So the more you are watching your stocks go down or be volatile, wondering when they're going to swing up, is creating anxiety that you don't need. Stay invested, stay diligent with your financial investing plan. Set it and make it automatic so that no matter what, you're still investing that money every single month or quarter, depending on how you're doing it. But don't keep checking that portfolio over and over again because that will increase your anxiety and it is not going to help you at all. And anytime you are watching the news or you're seeing the headlines and you're feeling that uncertainty pop up, come back and listen to this episode because we got to focus on what we control. We've got to make sure to tune out the noise so that we can stay connected to our financial plan because what you do in uncertain times will really compound for you long term. So make sure that you stay diligent, stay invested, stay educated, but don't overconsume information. All right, guys, thanks so much for tuning in today. If you have a question for me, go to candyvalentino.com/askcandy, and we're going to answer your questions right here on the show. So if you have a specific question, if you're feeling unsure, if you have some anxiety, ask me. I will be happy to answer it here on the show. We're going to be doing them weekly. So look forward to me answering your question very soon. All right, guys, thanks for spending this time with me today. We'll see you next time.